So looking at applying premium discounts to the market, what we want to look for is price to obviously retrace to either premium or discount. Discount for a bullish market and premium for a bearish market. So if we draw on our tool from the low to the high, so this is the low and the high of the current range. So as you can see, we get this breakup, price then retraces, and it comes into discount, taps into this demand here, and then runs off. And then after this breakup, we only get a pullback here. So once we get the pullback, we mark up the low, which is this one here, the lowest point before the break, and the high, which is this. As you can see, price doesn't come back to the EQ here, and that's fine. Obviously, we can expect it to come back, but it doesn't always. So moving on, we get a break up there, and then we get a pullback from here. So we mark up the low and the high. And these will be your swing points, so you should already have these marked. It'll be like this and this. So you can just mark up, draw the premium discount from the low and the high of the swing points. As you can see, price comes to the EQ, and then it reacts off of this whole demand range before moving off. So we've got another break up here, and we can draw from the low to the high. Price then comes down, reacts off of this wick here, which is almost in discount, and then shoots. So this wick here swept liquidity, and it flipped this supply. So it could be a good level to trade from, and it's obviously not in discount, but that's fine. Obviously we use this as a confluence, so it's just good to know where you are in the leg. Okay, so we come up, and we can draw on our low here, which is this to this. As you can see, we get a pullback here. Price pulls back into the EQ, reacts off, fails to push up, and then comes down. So we break structure to the downside here, and we've got our high and our low after the pullback. And then price comes up, doesn't react off of the EQ, just misses it, and then pushes down. So we've got a breakdown here. We get a slight pullback, but this pullback is only 36 pips, so it needs to be at least 40 for the 4 hour. So we get a breakdown, and we draw on our premium discount, and we come back into premium here. So we look to sell from premium, so we look for a sell from possibly this wick, and we might have taken a loss here, which is fine. So we break up, and now we draw on our premium discount from the low to the high, and I'll draw it to probably this high here. That's the highest point after these ones. As you can see, we come back down into discount, and we react off of this flip zone like so before moving off. So that's a great place to buy from here, to look to take it to this week high. So we get the break up, and then we get a pullback from this, and we come down into this demand here, it looks like, before then moving off and breaking structure. So we draw from this low to this high. As you can see, we come down into discount and react off of this. What I'm thinking is we tapped into something on the higher time frame here. Yeah, this supply over here, which is why we would then reverse down. So we get a breakdown. We then draw from the low to the high, and we can look for sells from premium, which is here. And then we come down, breaking down again, high to the low. Price then retraces into premium, and then comes off of something up here. Yeah, it came off of this, which swept liquidity and yeah, broke down. So then we come down, breaking structure again, draw on from the high to the low, As you can see, we don't reach the premium this time. We react off of something on the lower time frames here before pushing down. So obviously it's a good confluence to use this, as you're expecting price to reach at least the EQ. And I think it's more for what happens more on GBP USD. I know price likes to retrace to the extremes on that a lot more than euro dollar. So on the euro dollar, I know it reaches either the EQ or it could even reach in premium before shooting off. Doesn't always reach the discount for longs and the premium for shorts. But yeah, still use it. It's a great tool to use to see where you are in the leg and to see where's a good place to buy or sell from.